Welcome back to another module. So in this module, we are going to be talking about how to select cryptos. How are you going to supposed to how are you going to select crypto for the best crypto to trade? Then we are going to talk about how you can use Binance, how you can go through Binance, what is leverage, what type of leverage you should take, and how a beginner should basically go throughout Binance, how to deposit cryptocurrency in your Binance account. So let's get started without wasting any time. Now, if you want to select cryptocurrencies for trading, firstly you should be having one permanent watch list of a crypto. So for example, over here I've got my permanent watch list for cryptocurrencies that I am tracking, and I just go through them and see which one's the best to trade. Now, this is not how simple it is. What you have to do is basically first you need to have a bias. What I mean by that is first you need to make sure that what side you are willing to trade for. For example, is my approach right now going short, or is my approach right now going long? So that's how you're basically going to form your approach. And basically how to form this approach, how to shift bias, how to form a bias, we are going to be talking about in depth in the last module, and this is going to be absolutely bang on. So make sure you don't miss the last module. Obviously, if you bought this course, you're not going to miss it, but just in case. So firstly, like I said, you need two things. First is your permanent watch list for your crypto. Second is your bias. Where is your bias at? Whether it is on the short side, whether it is on the long side. How to build the bias, we are going to talk about in the last module. So first, let's just say I've got a short bias right now. Okay, so I've got a short bias right now, and what I'm going to do is now, for example, let's just say I have a short bias and I see that the crypto market is at a very good level where I can start shorting the crypto markets, cryptocurrencies. So what I'll do is I'll just go through my watch list, and what I will do is I'll just look at the crypto that is very weak, very weak. What I mean by that is, for example, if you compare BTT, that is BitTorrent, to ADA. So if you look at the structures, this is the daily time frame on ADA, and this is the daily time frame on BTT. So BTT looks very weak. BTT looks very weak compared to ADA. So this is how you are going to basically look at crypto. So for example, if I have a short bias, I'm going to look at a crypto that looks already weak, because because the crypto that is already weak, it has a very higher chance to go lower even faster, or even lower much more than any other crypto would. Because for example, if you look at Matic, Matic is a very strong crypto, and whenever the market dips, Matic does not dip at all. Even if it does dip, you can see it recovers rapidly. So this is what I'm talking about. If you are, for example, let's just say if you want to take a trade on the long side, if you are bullish in the market, what you are going to do is you are going to find out a crypto that has been outperforming the market, that has been very bullish, and then you are going to find for your pattern. You're going to look for your pattern, and then you are going to execute your trade as per your setup. So for example, sushi, let's just say I have got a long bias in the market, and I'm waiting for a perfect trade to come. So how do I select my crypto? So like I said, let's just say if I have a long bias, I'm going to look for cryptos that are outperforming the market, that are already strong. Because if I go long on the cryptos that are already strong, that have already a strong movement already happened, there's a very high chance that they are going to continue on the higher side. For example, sushi, if I go to the early time frame, you can say sushi has done a very good move. Over here it did a really good rally, then it halted, and then yet again it continued. So if we see where Bitcoin was over here, so on 27th December 11, let's just see where Bitcoin was. So if we look at Bitcoin on 27th December, Bitcoin was somewhere around here, and then Bitcoin dipped. So if we look at sushi is however very strong. Sushi did not dip at all. Sushi continued going higher while the whole crypto market was going down. So this is how you basically stand out. So what you have to do is you just have to find out what crypto is already strong, and what crypto is going to be the best to for your selecting your trade. Now there are going to be two types of cryptos that you are going to come across. First type is going to be the crypto that follows BTC, that goes as per BTC. Like if BTC is gonna pump, it's gonna pump as well, and if BTC is gonna dump, it's gonna dump as well. Then the second type of crypto is going to be that moves on its own. It does not care where BTC goes, it moves on its own. And recently I took a trade in Waves USDT. If you guys know, if you guys have watched my YouTube video, in this cryptocurrency. So this cryptocurrency doesn't care where BTC goes, it's moving as per its own convenience. So this crypto has been dumping since a very very long time, and this is something that where I took the trade, because this crypto does not care where BTC goes. So I did not have to worry whether the market was pumping or not, because waves does not follow much of what BTC does. So that is why I took a very long period of time trade, because this crypto was going on its own. That was one of the reasons. So this is the second type of crypto which moves on its own. Moreover, so what you can do is to make your job simpler, you can search for cryptos that move on their own, and they don't really follow BTC. Because that will make your trading a lot more easier. But if you want to trade with confirmation, if you want to trade with confluence, you need to find out cryptos that follow BTC. For example, all the cryptos that I have in my, most of them follow BTC. So what I have to do is I just have to keep tracking Bitcoin structure, and if I feel that Bitcoin is okay, Bitcoin is now going to go bullish, or Bitcoin is I'm bearish on Bitcoin right now, what I'll do is I'll develop a short bias. Okay, and then I look for cryptos that are already weak, right? And then what I will do is I'll try to short the crypto that looks already weak. For example, TRX over here, TRX looks very weak. And if BTC goes bearish, if BTC gives a bearish signal and TRX break this support, I'll basically just short TRX, because TRX is an already weak crypto. So it's going to go dump lower even more than any other crypto. So that's how you basically develop an edge in your crypto selection when you are trading. So all you have to do is, in a nutshell, all you have to do is you have to first form a bias, of about which we'll talk about in the last module. Then secondly, you have to have a permanent crypto watch list. From that, you can also make two watch lists. Basically, one watch list can be the cryptos that follow BTC, second can be cryptos that move on their own. So this is something that also that you can do. Then from that, after that, you have, let's just say you have a long bias, you are going to look for cryptos that are already very strong, that look very strong, and even when they dip, they don't dip that violently. So on that, if you have a long bias, you can take long trades on that, and if you have a short bias, you can take take short trades on the cryptos that are already weak, because they have a higher chances of dumping more and giving you a more profit, or a bigger profit. So basically that's how you should be selecting cryptos, and that is actually the right way to select cryptos. And obviously what you can do is you can also take independent trades on the cryptos that do not follow BTC. So basically that's how you are supposed to select cryptocurrencies. Now let's talk about how you're supposed to use Binance, how you're supposed to deposit cryptocurrency in your Binance account. So if you don't know, Binance is one of the best and one of the largest exchanges in the world, I would say definitely one of the best in the world for crypto trading. So over here I have got the Binance desktop app. On the phone is pretty much similar. So over here, what's the first thing that we see? The first thing that we see is for spot markets, USDM futures, CoinM futures, ETF. So what are spot markets? Spot markets are nothing but the actual markets. Like on spot is, I would say, like if I, in stock market, how it is in stock market, if I'm buying a stock on delivery basis, or for holding, same thing is like spot market. If I buy a crypto on spot market, I'm basically buying or investing into that actual crypto. So spot market is that, and then USDM futures is basically futures market, and CoinM futures is, these are basically just two segments of futures. You won't need CoinM futures. You should definitely be trading only on USDM futures. These are just different segments of futures contracts. And the best part is, like I said, you don't need a lot of money to trade futures in crypto. And one important thing I would like to say is how you should be trading crypto futures as a beginner. So if you just follow this simple advice, you will never be blowing your account. So first of all, if you are starting cryptocurrency trading, what I would recommend is that, if you, first of all, if you have a long bias in the market, if you are taking long trades, take them in the spot. Take them in spot, in the spot market, or if you take in futures, just use 1x leverage. Do not take any leverage at all, and make sure your leverage is your margin is in isolated mode. What it is, we are going to be talking about it even in more detail. Don't worry about that. But like I said, if you are a beginner, first of all, I would advise, if you are a beginner and you have a long bias in the market, take trades in spot. But if you are a beginner, if you have a short bias, you can take trades in futures, but make sure you are not taking any leverage at all. If as a beginner, if you just stick to this particular rule of not taking leverage at all, trust me, you will make a very good trader. And how to use leverage, we are also going to be talking about that. So it's not just that I'm not going to tell you anything about leverage. Of course I am. So but if you just follow this simple advice as a beginner, you will never ever blow your account. And obviously your risk management should be into place. You should never be risking more than 2% of your capital on your trades. Those basic things on the about risk management I've covered in my YouTube videos as well, so I'm not going to go in depth about risk management. So that's how you can never blow up your account. Now Obviously, if you want to deposit crypto into your Binance account, there are I would say, as especially as an Indian, there are only two legitimate ways that I would say are there. First is P2P trading. Second is basically you have to buy crypto from an Indian exchange and then deposit that into the Binance exchange. So P2P trading is something that I would say, yeah, for occasional purposes or for urgent requirements, you can use P2P trading. P2P trading is basically what you do is you pay someone cash, you bank transfer some Indian person, or doesn't really mean Indian person, but you basically transfer your money into someone's account, into someone else's bank account, and that person will send crypto into your account, into your crypto account. And that's what P2P is. But basically you end up paying a lot of fees, transaction fees, conversion fees, or whatever you want to say. You pay almost 5 to 6% fees into that P2P trading when you do P2P trading. So I don't really recommend doing P2P trading, but what I recommend is going through opening an account in your Indian exchanges. So if you want to do this smoothly, you need to have two crypto accounts, first in Binance, second in an Indian exchange. Now that could be WazirX, CoinDCX. Personally, I use CoinDCX. So in the Indian exchange, what you have to do is you have to deposit your money from your bank. You have to buy crypto in your Indian exchange, and then after you have bought your crypto, you have to transfer that crypto into your Binance account. Now there are a lot of YouTube videos of showing you how to do that, so I'm also not going to cover that. My whole main focus is going to be covering the main key points that are actually going to help you become a good trader, and those things can be obviously researched by on your own on YouTube and all that stuff. Now coming to leverage, basically how you're supposed to use leverage. Now if you see over here, we've got a perpetual. Now what does perpetual mean? Perpetual means never ending. So basically these are future contracts that don't have an expiry, right? So over here, let's just say if I select BTC USDT, I want to trade Bitcoin. So what I can do is, let's just say I want to buy Bitcoin. So over here you have two types of margins. First is cross, second is isolated. So basically cross is something that if you are taking a particular trade, you are putting your whole account at risk if you don't place a stop loss. For example, if I have a $10,000 account and I deploy $1,000 in this particular account, but if I have taken a lot of leverage and the market goes against me, my whole $10,000 is at risk even though I deployed only 1,000. That is what cross margin mode is. And what is isolated? Isolated margin is something that I advise all beginners to use, because in isolated margin, if you deploy, for example, if I have a $10,000 account and I deploy $1,000 in a Bitcoin trade, then only and only if that 1,000 is at risk. So I cannot lose more than $1,000 in that particular trade. So that is why all beginners should be using isolated mode, because that does not put your whole account at risk if you are in a particular trade. But obviously if you are using proper stop loss, if you are using proper risk management and position sizing, then obviously it does not really matter whether using cross or isolated. Personally, I like to use cross because you can adjust your leverage, and you can basically do some modifications in cross, but in isolated you cannot do that much. But obviously you should be following your risk management at all times and position sizing at all times. So that's how you're basically going to use leverage. Now how much leverage should you take? I'm going to teach you the right way to take leverage. Now first of all, your leverage should never go more than 10x. Your leverage should never ever go more than 10x, no matter how much you are trading, no matter how good you are at the markets, because taking 10x, more than 10x leverage does not make just doesn't make any more sense. Because I'll tell you what's the right way to use leverage. Now how most people use leverage. For example, if I just have $1,000 account, what a beginner would do is he would take trades worth $10,000, because he is taking trades with the money he does not own, and that's not how you should be using leverage. And that's how what broke people do. Broke people take loan from the banks because they can't be able to afford to pay that back. But what the smart people do, the smart people take loans that they can afford to pay back. But what they do is they take that loan and make money from that, make smart use of that money. So never ever take leverage of that much money that you cannot afford to lose, or that you cannot afford, because in the end what's going to happen, you're going to get liquidated. So what is the smart way to using leverage? Let me just go about that. So for example, let's just say I have $1,000 account, correct? I have $1,000 account and I'm taking like 5 trades, and now each of the trade is requiring me $200. Correct? Each of the trade is requiring me $200, and I have 5 opportunities. So over here, what's happening? My whole $1,000 account is occupied. Correct? So if I see the sixth opportunity, I will not be able to capitalize on that. So what's the right way to use leverage? The right way to use leverage is to capitalize on the additional opportunities that the leverage offers. So this is how you're supposed to use leverage. For example, if I just have 5 trades running and I see a sixth trade and I don't have capital for that, so what I can do is I can take leverage on one of these trades and increase my funding, or I would say increase my liquidity, and from that increased liquidity I can capitalize on this sixth opportunity. So this is, I would say, is the right way to use leverage. Basically, you can take multiple trades with the amount that you have. Obviously, you are still going to follow your risk management, but I hope you guys are getting my point. For example, if I have $1,000 account and I have a trade running with 10x leverage, correct? Now in this particular trade I deployed thousand, let's just say $500. So now I deployed $500 in this account, but I have taken 10x leverage. So I will require to pay only a $50 margin because I have taken 10x leverage. So now I have $950 free with me. So I can take more, I would say 20-50 opportunities like that, just because I have taken leverage. So basically what the point over here is, you're not supposed to take trades that you cannot afford, but you are supposed to take opportunities, capitalize on the opportunities using the leverage. I hope you guys have got my point, what I mean by using leverage and how you're supposed to do that. Now obviously the market orders, limit orders, all of this is the same thing as the stock market it is. So I don't think I need to go in depth and explain that. So this is basically how you are supposed to select your cryptos, how you're supposed to basically use Binance, how to deposit money into Binance, and how you are supposed to use leverage. And remember the rule that I said about how you should how you will never blow your account. It's pretty much simple. When you are a beginner and you are starting off, if you are on the long side, trade in spot. If you're on the short side, you do not use leverage. So for how should you not never use leverage? What you can do is, if you don't want to use leverage, you can just come up here over here, and you can just if I just do it 0x or even just 1x, 1x is basically you are deploying your own capital. So if you trade at 1x, you are not using leverage at all. And even for a safer side, what you can do is you can click on isolated and then use 1x. So that's how you should be starting off in the crypto markets as a beginner. And trust me, if you just follow this and your risk management, you will never ever blow your account. So thank you so much for watching, guys. I'll see you in the next module.